Hi everyone, hope you're all doing well, and today we're talking about growth stocks and why growth stocks keep going down, or some of the stocks are generally not doing anything at the moment. And a lot of this comes off amazing earnings. Some earnings that have come out over the last kind of couple of hours, or even the last couple of weeks should I say, have been absolutely amazing. Some of these stocks are just not doing anything. In fact, some of them are going down. And as me as an investor who has probably about 50% of my portfolio in a lot of these growth stocks, obviously you guys watching this as well, I reckon a lot of you guys are growth stock invested as well. We'll kind of talk about this and what my kind of thoughts are on the current situation, why this is happening, and also what I am planning to do. So if you could smash the like button, if you're new, subscribe. The road to 10,000 subscribers is on, we are nearly there. And if you do want to join my Patreon, where I post when I'm buying and selling things, links are in the description, as well as if you want to start investing, there's some brokers in the description as well. But we'll get on to today's topic. Now, this is actually my second time filming this video. The first time I did not connect to the microphone correctly, and it just sounded like a bunch of noise, and I was like, no, that's not good enough. So we're doing it again. So just some things that you don't see on the YouTube side of it, I guess. But yeah, so growth stocks, a lot of these are kind of like, at the moment, a lot of the small market cap ones, 1 billion to 10 billion, I would say. But even sometimes it's even growth stocks are highly more value than that in the market cap size. You know, we're seeing stocks like Amazon. Amazon brought out amazing earnings. The EPS was just unbelievable. Just crazy numbers came from Amazon, and the stock kind of went up and then it just gave it all back within the same day, and it was just absolutely crazy. So there's sometimes some stocks that are growth stocks that are a little bit higher value than this, but definitely around the 1 to 10 billion are the ones that are getting affected quite a bit at the moment. Now, for me personally, this is what my kind of philosophy of investing is built on. I kind of 50% of my portfolio is in growth stocks that are kind of like 1 billion to 10 billion. The reason why I get into these sort of stocks is that quite often Wall Street hasn't fully picked up on how amazing these stocks are, or how amazing these stocks are going to do in the next few years, because they're quite small, early stage growth companies. And eventually what will happen, and this kind of comes off the back of Peter Lynch really. I'm a big fan of Peter Lynch, One Up on Wall Street, I read that book all the time. And basically what you can do as like an individual stock picker is you can pick up some of these small market cap companies before Wall Street realise, and then these stocks go on to, you know, 2-3x in the next kind of few years as Wall Street kind of wakes up and kind of starts buying these companies. And that's kind of my aim. I buy a lot of these growth stocks that I kind of hold for 2 to 5 years. I normally expect to get at least 100% return on a lot of these companies, and you know, 100% return over 5 years is 20% every year, which is really good. That's always my aim. But realistically, my whole investing philosophy is that. But I generally, when I buy a lot of these stocks, I do hope they go up more than 100%, and I quite often hope they go up 100% more or quicker than 5 years. I hope them to do it more earlier than that, sometimes even in the first 2 years if possible. Doesn't always happen, you know. If it does, that's amazing, we hit a home run. But yeah, quite often 100% return, and sometimes, you know, even more. You know, when I bought the likes of Tesla, that went up a lot from there, you know, I always thought, you know, I'll make 100% return from that, but I always thought it would do more. But that even outperformed what I thought. Pinterest, JD.com for example, Square, there's a lot of companies like that that I've always invested in, that I've kind of had that theory of how it will work out for me. So for me, this 1 billion to 10 billion growth stock is really important as me as an investor, and quite often these as well are a lot more retail investor based, you know, a lot more individual, me and you, that are buying a lot of these companies. And like I say, a lot of these comes off amazing earnings. A lot of these companies that brought earnings out over the course of like the last 1 week, 2 weeks have been absolutely amazing. I mean, Turtle Beach gave me a panic attack last night, because Turtle Beach, I think, is somewhat around about $1 billion company, I think it is, maybe even a bit smaller. They brought earnings out and they grew revenue 166%, and the stock went up and then it gave it all back, and now I think it's actually recovered some of it. But that gave me a little bit of a panic attack of like, no way is this happening on a company that just grew 166% in revenue. But like Corsair earnings were fantastic. I think with what the profit they're putting in, they're trading at like a forward P of 15 now, which is just crazy amounts. So their earnings were absolutely amazing. There's definitely, I actually thought about doing a Peloton video. I don't know if you saw the news with them guys yesterday, but Skills is another one. Skills brought out preliminary revenue that was higher than expectations, and then this earnings 4 weeks later beat that revenue and then upped the outlook once again from there. So you had 2 outlook raises with skills in 4 weeks, and the stock's gone down. So that's another one that's happened. AMD, that's probably a bit of a bigger market cap company that's totally reversed from there. Shopify earnings were unbelievable. The stock totally gave it back, and they were the best earnings I think I've ever seen Shopify do. There's a lot of companies. I'm trying to get them all in my head very quickly on the spot, but yeah, there's just so many companies that have brought out amazing earnings, and they've just not bothered, and it's a weird situation that's currently going on. So I'm going to give my thoughts on why I think this is happening, and I think it's more of multiple reasons rather than just one reason, and then I'm going to say what I'm doing in the current stock market situation. So first of all, retail investors. A lot of these stocks are based on retail investors, but some of them definitely, the big moves come from a lot of these guys on Wall Street, the hedge funds. But retail investors, which make up a good part, my opinion is retail investors are kind of slowing down a little bit at the moment. I think retail investors have a lot of being pulled forward because everyone's been at home thinking we'll get into stocks. So I don't think there's many new retail investors coming in at the moment. I think with retail investors, what's happened as well is that we had the stimulus checks and they've kind of gone out as well. I think we've got the kind of the economy reopening, and because of that, retail investors aren't focusing on the stock market as much. They're kind of going out a bit more, I guess, right now. And as well as retail investors, I think unfortunately what has also happened is a lot of retail investors, when they got started in the stock market, or the new investors, should I say, a few months ago, a lot of these retail investors started off as value investors, dividend investors, then went to growth stocks, then went to SPAC stocks, and then from SPAC stocks, he went to had this the mentality that these stocks just keep going up and up and up, and we then started even going to really risky stocks like penny stocks, and a lot of these penny stocks have gone massively down. And I think it's kind of gone, this isn't for me. I'm going to move away from these stocks. I'm going to sell out. I'm not doing this anymore. And I think that's seen a few people exit. I think that also that because the growth stocks may be the ones that have performed amazing over the last kind of few months, and the penny stocks had gone down. What they've done is, okay, we'll sell the penny stocks, we'll sell the growth stocks that are in profit and cover the losses. As well as just, maybe just getting totally fed up and leaving the market. And also maybe people are thinking, the stock market's kind of having this period where, it isn't going up to 100% every year. I'm not doing this anymore, I'm moving out. So I think maybe that's also people getting a bit bored because they realise, stocks don't only go up. And as well as that, I think retail investors have quite a few of them are moving into crypto at the moment. Crypto is a space that's definitely hot. I think there's the rotation into crypto, and it's just mental. I mean, look at Dogecoin, it's just absolutely crazy. Maybe people are moving from there thinking, I want a part of that. And maybe people are going in there. I mean, Bitcoin's like valued at 1 trillion, is it? So I think there's a bit of rotation into crypto as well going on. So I think that's where the retail investors are at. I think there's a lot going on there. A lot of money has come in, not much money coming in anymore. And if anything, I think the money from there is moving out into other places at the moment. So I think that's what's kind of going on the retail front. Wall Street's a little bit harder because I'm not involved with retail investors. I can kind of see that because on the YouTube scene. But with the Wall Street side of it, the hedge funds, the big money that can move a lot of these stocks, this is a lot harder for me because I'm not really involved in that space. But one part of me kind of thinking, there's a saying around the stock market that goes, sell in May and go away. Now I think some of that might be going on. And basically what happens is, the saying is, January, February, March, stocks go up. From there, people start selling their positions, or hedge funds, go away on holiday, maybe they need a bit more cash. And then what happens is in about September time, the money starts coming back in and the stock market moves back up towards the end of the year. Maybe a bit of that is going on with these hedge funds. Maybe that they've obviously had a bit of profit, they're going to take that out, now people need a bit more money, now everything's opening up. So maybe a bit of that's going on from Wall Street, and also that they're rotating into other areas as well, like value stocks. You look at the S&P 500, that's near 52-week highs, where a lot of these growth stocks are, massively sold off. So I think that's kind of what's going on with Wall Street. I'm not 100% sure on this one because, like I say, I'm not massively involved in Wall Street. I'm not a hedge fund manager, so I can't tell you exactly. Unless there's a hedge fund manager that wants to pop up in the comments and tell us what's going on. But that's personally what I kind of thinking on Wall Street side of it. Now, one thing is that I used to think that valuations was a big part. You know, valuations to where they were 3 months ago, you would say everything's, you know, massively overvalued. Right now, it's literally like a kid in a candy store. Like, there's so many great growth stocks on sale. It's crazy. You know, one of the big ones for me is like Teladoc. Teladoc is now back at pre-CV prices, and it's like, you can't tell me Teladoc should be the same price as what it was pre-CV. You know, so many people are now using the platform, so many companies are using the platform. The CV situation has helped them as a company. They're not in the same place as what they were 12 months ago, but yet the stock's back at the same prices, and that's a valuation of a stock that's just, you know, it's just nuts. And there's a lot of these out now. There's a lot of valuations. I'm going to get on this in a little bit, but it's literally getting to the point of valuations now where I'm like, I used to think that's a problem, but I don't now, because there's so many great growth stocks on sale. You can pick so many, and it's actually, this is a point I'm going to make later on, but I was going to say, like, it's actually at the point now where I'm actually being careful not to buy so many different stocks. I'm trying to focus on the 5 stocks that I think are the best opportunities out there, because I was looking at companies like AMD, which had amazing earnings, the stock didn't move. Enphase, that had amazing earnings, the stock went down. And I'm looking at like them 2 companies right now, and I'm like, they're great companies. I want to go buy them, but I'm looking and thinking, realistically though, what for me, which is the better company, Shopify or AMD, or is it Teladoc or Enphase? And I was like, I can't go buy everything. So the thing for me now at the moment is that the valuations are that good that I have to be careful not to go buy everything and only buy the few stocks that I think are going to perform very well. But there's a lot out there to choose from. You know, those were 2 companies that I love, and I just don't love them as much as the other ones that I currently own. But honestly, I just had to be careful. That's something that I thought I'd share with you guys, that's nearly a mistake that I made. So I used to think this was a problem. I don't think that's a problem anymore. This is supposed to say interest rates, but that is unreadable, that interest part. But yeah, interest rates. So I hear a lot of people saying that interest rates is the reason why this is happening. Personally, for me, I don't exactly believe this. Sure, it might be take a little, like I say, I think this is all one thing why the growth stocks are kind of not doing anything. But interest rates is one that I'm hearing getting louder and louder, and I think it's one of those that if so many people shout it, everyone starts believing it. For me, it's not that. You know, interest rates, stock market, when interest rates have been higher, the stock market still carried on going up. It's not bothered about interest rates. I think everyone's looking for something to blame. I don't think it's that personally. I think whenever we have a bit of a slump in the stock market, everyone looks for something to kind of go, oh, that's the reason why. I mean, how many times I've heard over the last kind of few years about the 10-year treasury yield going to cause a stock market crash, and that's why the stocks are going down. And I think people try and focus on one reason, and you know, interest rates are always going to be there. They're at ridiculous rates already. You know, let's not forget, you know, this is, you know, free cash, here you go. I mean, that needs sorting out, it needs raising. But for me, you know, the stock market, you know, people aren't going to go stop buying stocks because it's at that certain rate. You know, it's you look at every bull market and interest rates will be higher than what they've been right now. So yeah, I personally don't take anything too much from this. Sure, it might be a little bit of a factor there, but it won't be something that holds the whole market back, if you get what I mean. So yeah, and also I think maybe short sellers. I've not seen any short sellers for like the last 12 months for some reason, but now, you know, you go on Yahoo Finance, you go on Seeking Alpha, short sellers seem to be making a return. Maybe that's holding valuations a little bit back now that the stocks are kind of flatlining. They're kind of, maybe Wall Street's moving into a few more short positions again now, I don't know. Maybe short sellers are kind of spooking a few people at the moment. But yeah, I've seen a lot more short sellers make a return, and they've kind of disappeared over the last few months. So maybe that's another reason. Maybe that's kind of affecting it. But generally overall, like if you came today thinking I was going to give you a reason why, like, oh, this is the sole reason why the stock market's being held down. Personally for me, I can't give you one reason. I think it's a combination of quite a few things. I think we've been, you know, let's not forget, we've been on a very good run the last 2 years. You know, if you've been investing in 2019, 2020, you'll have amazing gains, and don't forget that, you know. But I think I can't give you one reason why the stock market's down. I think it's just a combination of loads of things coming together, and that's why we're currently like this situation at the moment, and why we're having, you know, great companies sold off, and also great companies that are sold off bringing amazing earnings out and they're not moving. So personally, what am I doing? Well, I'm not fazed by this sort of thing. You know, there is going to be situations where the stock market has periods where it actually doesn't do anything. It's just part of the game. That's always going to happen. You know, when you zoom out onto like an S&P 500, what you'll see like, it'll just look like that. It goes up. You know, stocks, great companies that put in great revenue growth, that put in great profit growth, they'll go up. And when you zoom out, the S&P looks really easy. But what you won't see in there is, let's say that this is 2020. Now in 2018, let's say, which is about here-ish, 2018 was a period where the stock market actually went like that. It didn't do anything. In fact, I think 2018, I think the stock market was down 7%. But on zoomed out S&P 500, you won't see that. But in 2018, the stock market was flat, and in that period when it was flat, what you had is companies still doing amazing profit, doing amazing revenue, but stock prices didn't reflect it. And there was stocks like Apple. Apple's always one that I love to use in this period. Apple didn't do anything. Now from there, Apple from 2018 is now up from them prices a huge amount. I don't know exactly, maybe 150%, maybe 200%. Apple went on a crazy run from there. So if you took advantage of this quiet period where stocks didn't do anything but the companies were still performing, valuations were getting cheaper, you make the money on them. And this is exactly what we're kind of having right now. We're having a period where for 3-4 months we've kind of had stock prices where they're kind of like, just flatlining and not doing anything. And what will happen eventually is Wall Street will realise the money will rotate, it will come back in. People, they're not going to stay at these valuations forever, and they'll wake up and they'll go up in value, just like Apple from 2018. They went up absolutely huge. And you've got to realise we have been on a good run. These quiet periods do happen, but these are great buying opportunities, if anything. And these are the best times where you can make money when when the stocks are not doing anything or going down. And what will happen as well is people think when Wall Street rotates and comes back in, people think that what will happen is, let's say a stock like Tattoo Chef. People think what will happen is it'll just go like this. But when Wall Street comes in, honestly, that's not what happens. It literally goes like that. When the money starts rotating in, the stocks kick off very, very quickly. When hedge funds want to start buying a company, they will kick on very quick. And this is what like Peter Lynch kind of talks about in One Up on Wall Street, is that as soon as Wall Street kind of waking up to a lot of these amazing companies that are putting in great numbers and great growth, great valuations, Wall Street comes in, the stocks, you can't time the market. It changes so quickly before you can even capitalize on it. So yeah, I'm kind of like, happy to buy a lot of these companies on the dip. There's going to be time, this is why you have to be prepared. Like, people ask me all the time, like, where's this stock going to be in 3 months, 6 months, 12 months? I can't tell you, because no one knows where the stock market's going to go. No one can, anyone that can tell you they can predict where the stock market goes is not telling you the truth. It is impossible to predict where the stock market's going to be. In the long term, I'll tell you the stock market will be higher than here. But in the short, and that's the benefits of being a long-term investor, if you've got the patience, you'll see the rewards. But if you're trying to time the market, this game isn't for you, because the stock market can go anywhere in the short term. And this is why people ask me for my opinions in the short term, and I can't give you it, because if we hit a stock market that flatlines, if we hit a bear market, you've got to be prepared that them stocks, you just got to hold them for a little bit, and you've got to have the patience. And if you don't have patience, the game isn't for you. But if you've got patience and you can buy a lot of these great companies, like I said previously, you'll get the rewards from these sort of situations, and the stocks will wake up. So yeah, for me, I'm looking at a lot of these companies. I'm trying to pick up a lot of these amazing growth companies that put amazing earnings in, and I'm just patience. And eventually, when the money rotates back in, a lot of these stocks will go up in value. And yeah, some of them are just at crazy valuations right now. So personally, for me, like I say, I can't give you like one reason why this is happening. I think it's a combination. But what I'm doing is I'm trying to focus on my favourite companies, growth stocks that are sold off, buying them, and then thinking, okay, let's hold them, see where the stock market comes, and eventually when the money comes back in, they'll wake up and they'll go up in value. And that's personally what I'm looking at doing at the moment, and that's my game plan. And like I say, if you love buying cheap stocks and have the patience, these are great times for you. These are really, really good times. Just like if any of you guys were in 2018, so many companies that were sold off, you would see massive rewards from buying in these sort of dips. So personally, that's what I'm going at the moment. Like I say, I can't give you a solid reason, so sorry if you wanted one reason. I think it's the combination, and personally that's what I'm doing. You know, I think that if you are a long-term investor, these are the great opportunities for you, and if you've got the patience, the rewards will come at some point. And you know, let's not forget, we've had a really good couple of years at the moment, and so to have a little bit of a quiet period would be fine. And yeah, that's where I'm at with everything. So I hope you enjoyed it. If you could, smash a like button. If you're new, subscribe. Like I say, the road to 10,000 subscribers is on, and I hope you enjoyed the video, and I'll see you in the next one.